How are you guys doing? This is Ryan, welcome back to the channel. Today we're gonna be talking about why the stock market is going up, but it seems that the economy is still going down. Unemployment's every day, the current illness in the economy is still going up. Why is the stock market going up? And why do we have the best week since, I believe, 1974 in the stock market? We're gonna get into that, and also we're gonna ask, by looking at my hair situation going on, is being a barber an essential business or not? Because I'm starting to think that it might be. Anyways, let's get into it. So on March 29th, I made a video saying that I believe the stock market has likely bottomed. When it hit negative 38%, the Dow was around 18,000. And it was a really ballsy thing to do because there was a likelihood I could be wrong, but I feel like the likelihood was most likely that I was correct. And I'll link that video in the description below and go over reasons why I was confident enough to go out on a public forum and say that the market has likely bottomed. And I promise I'm gonna be wrong, but there's really something going on here why I'm not like super smart. I'm just looking and assessing a situation and able to come to a likely outcome. So before I get deep in this video, I really want to preface that this is not financial advice. These are strictly my opinions, and I have a lot of opinions for today's video. So I really wanted to say this early and make sure everyone knows I am just sharing my opinions and my journey, and it's really a reflective vlog for me to look back at my investments and the calls I make on investments and to see how I'm doing to improve as an investor. I want to make greater returns. And I'm almost going on 1 year on YouTube, and I wanted like a 1 year summary of how I did with my investing journey. That video will probably be for next week. So make sure you subscribe to the channel with the notification bell on, and we'll review how I did. So when the stock market started crashing, for me it was really about at the end of February. I went through my Robinhood account today. I was like, how much have I invested during this time? And that number actually came to about $11,624. I'll put it on the screen here. That's how much I've bought in the whole way down, and I started in late February, and it's continuing on now. I'm still buying stocks as we speak, because we're still far below all-time highs, and we're finding different stocks have bottomed at different times. So the full market may have found its value on that Monday when we almost hit 18,000 on the Dow, but different stocks are bottoming at different times. So there's still a lot of value to be had, in my opinion, and I really believe we'll get some strong pullbacks, but I think going below 18,000 Dow is unlikely. Now, when I made that video, I put it in some Facebook groups, and I really had my intelligence insulted. You know, people didn't like that I was making such a bold claim, that I was pretending to be some kind of YouTube guru, which I'm really not. I'm just documenting what I'm doing and trying not to look like too big of an idiot. One guy actually told me, you need to go follow my Facebook group and learn something about stocks. We're obviously going down another 20-30%. So I went on his Facebook page and I said, do you still think that we are going lower, or would you like to apologize now? Because he was like really mean, like called me an idiot. So anyways, that's the world of social media when you put yourself on a public forum and you say crazy things like, I believe the stock market has bottomed. So, but let's get back to the stock market is going up, but the economy is not improving. So there's actually a lot of variables at play here. So I want to talk about the idea that the market is a forward-thinking machine. I've mentioned that in the other video. So it's trying to price in future value, but also like it can make mistakes on the way down. Like when the market started dropping, I didn't know it was going to go down 38%. When it was down 38%, I felt like the systemic risk had been met. Like the government was doing something about it. We had a plan of action, and we knew that the Federal Reserve was gonna flood the economy with dollars. Now those dollars are gonna go to a lot of different places, and we're talking $2 trillion. A lot of that is gonna end up in the stock market. Politicians who, not to be political, but a lot of them have huge corporations that make sure they get elected, want to make sure their stock prices are going up. So the government is very enticed to make sure the stock market goes up. So the value of your dollars really isn't that important to politicians. Having the stock market go up and having corporations continue to fund their political campaigns and have all that happen, that's important. So when there's $2 trillion more dollars, a lot of those dollars will go and find their way into productive companies. So systemic risk has been met. A lot of money is going to be injected into the economy, and investors feel better about the future. In the future, I want to make more detailed videos about inflation, because real gains versus inflation to the market can be deceiving, and I really don't believe that the government is honest with their inflation numbers, but I'll talk about that more in a future video. So your actual gains versus inflation may vary. So let's say that inflation is close to 4% this year. Hypothetically, a lot of money printed, Inflation is close to 4%. And let's pretend that the government is saying it's that much. And the stock market goes up 6%. You're really only making 2% on your money. But if you stayed in cash, you lost 4%. So inflation's a very tricky game. It's a way that the government is able to fund things without actually taxing you for it. It's a very silent tax on people. So I think you really have to understand inflation, money being printed, to understand part of the reason why the stock market is going up. So I really want you to focus in on those two things. Massive amounts of more capital now in the system, and investors know that. And also, systemic risk was met. Systemic risk was met when the government said they had a plan to print money. We were gonna do social distancing. And right now, I just feel like the whole thing going on right now, like the government is telling us, you know, first it was 2 weeks to stop the spread. We did it for 2 weeks. Then now it's a month to stop the spread. What are they gonna say after April 30th? So these are things that can change systemic risk. At April 30th, if we don't have plans to improve even further and get life back to somewhat more closer to normal, then that could change the systemic risk. But if there's positives that we're moving in a right direction, we will continue to kind of make higher lows. And what I mean by that is, like, the stock market will go down, it'll make a new low, but it won't go below the previous low. So it'll kind of just progress as we go. And I really think investors should think about just being a little bit more contrarian with their investments. Like, obviously, when everything is getting better and back to normal, everyone's gonna start investing in the stock market more. You know, everyone's already moved to that side of the boat. But if everyone moved to one side of a canoe, once everyone's there, it's gonna already flip. So be the contrarian, get to the other side first, and that's how you can make money. The market is a forward-thinking machine, so you have to even think one step ahead of what the market's gonna do to make money. It's not easy to make a lot of money in the market. It is easy to just buy the index over time and not worry about it, and I do that with portions of my portfolio I don't even really cover on this channel. I have invested money into all my retirement funds every single week like I always do, but I am trying to massively build wealth with this Robinhood account faster, and even despite one of the worst stock market crashes of all time, I'm up about 20% year to date. And I think it's really important to look at, and I've definitely become a better investor over time. And I definitely think it's helpful to people to be around people that are actually having good returns, to think about things a little bit differently, and that they can do it consistently over time. That's why it's very important to follow like Warren Buffett and people like that, and try to take some of their wisdom. Now, I have a lot of mentors that have helped me. There's a lot of people and they'll still end up doing great, but they are down 20, 30% year to date. That's just my ideas. Like, you could just buy the index, not worry about anything. You'd be down right now, but in 10 years, you would probably have made a lot of money. So being contrarian is very important. And if you're just following the masses in investing, you're gonna have very mediocre results. And we just had, in my opinion, likely the best stock market buying opportunity of the decade. And I'm gonna say I should have bought more, and then people are gonna look back on this and say, I'm gonna wait for the next 2020 to start buying stocks. I had so many people tell me that I'm gonna really start investing when the stock market crashes. Just like in 2008, you could make so much money. Why buy stocks now? They're at an all-time high. Those same people kept on saying the stock market's gonna go lower. I'm gonna wait for a better price. Now it's gone back up. Oh, now I'm gonna wait till it goes back down. For whatever reason, they don't commit to it. And I just think those people really aren't investors. And if you're always second guessing yourself, it's probably not for you. One other thing I really wanna touch on in this video is so many people have reached out to me. Hey Ryan, give me a call. What's a great stock to buy? Like that's not how it works. You just don't come up with a great stock to buy and make money that way. Like, I really think people should consider a whole portfolio strategy. Buying quality, buying growth assets, buying speculative assets. Like, make sure you have high quality, a higher portion of your portfolio than lower quality. That's something I'm really trying to focus on right now. And when I say high quality, like how can you justify holding more of Carnival Cruise Lines than Johnson & Johnson? Not to call out Jeremy with financial education. Not to pick on him, but like, he's trying to become a dividend investor. Off to a bad start there. Anyways, not to pick on him. I'm down on Carnival too, but it's less than 0.5% of just my Robinhood portfolio, not my entire portfolio. So I think you have to really strategically look at investing. You should really have a nice base of your portfolio in ETFs. Just buying the broader market, so you can go to bed sleeping good every night, not worrying about how each individual company is doing. And I talk about this a lot, and I really believe it. This will probably be the last thought for the video, but another reason why the stock market is going up and the economy is going down is because we are in a secular bull market. I know people may not like to hear that because we're in bear territory right now. The market's pulled back so far. But what I mean by a secular bull market is that commodities like gold, silver, corn, different things like that, and stocks have an inverse correlation. For right now, for a lot of commodities, and I like to use gold and silver as one as a barometer, they're very profitable to mine and sell. And even though gold's having a good year right now, it's just too profitable of a business. Commodities is a great investment to get into when there's actually physical shortages going on. So you have this commodity sector that people need commodities to live their life. It's very important. Commodities are everything you're looking at in the house that builds your house. And when they're cheaper to buy, we can speculate more into growth aspects of the economy. And a lot of that money will flow into equities. And that's gonna continue to happen. And here goes Ryan making another bold call on his channel. We'll see if he's right. We are in another roaring 20s. In the 1920s, we were in the roaring 20s. We are back in the roaring 20s. We are more likely to end up in a stock market bubble than some kind of multi-year recession, depression type scenario, my opinion. We'll see if I'm right. Let me know what you think in the comment section below. Am I crazy or not? I still think there's a lot of investors that have not got back into the market. They still feel pain from 2008, and that's still too fresh in their memory. So like, you know, when you touch the stove and it's hot, you know to stay away from it. There's still so much capital out there. There are things likely to get invested, and there's a lot of exciting things that are gonna happen in the economy with 5G, self-driving cars. That's gonna bring people to the stock market that wanna invest in these fun, exciting things. But as an investor, I think it's important to have like a broader thesis into how I'm investing to maximize my gains. So this is just my broader thesis. This is how I'm foundationally setting up portions of my assets and the way I want to grow my money. So for all these reasons, this is why the stock market is going up, even though the economy is suffering in the short term. Systemic risk is understood, massive amounts of money being printed, we're in a secular bull market, and also just why did the market deserve to go down 38%? Like, what? That's kind of an arbitrary number. Like, why is the situation with the illness in the economy, why didn't it go down 30%, 20%, 25%, 36%, 38%? That's a very arbitrary number. So maybe it's likely we had an overreaction to downside. We know companies in Q2 and Q3 are gonna suffer from earnings, and that needs to be priced in on some level, but there's so much capital out there that can't wait to buy these great companies on these weak quarters because the economy was shut down, not because of systemic issues, because of a current illness that I hope everyone is staying safe from. And there seems to be positivity that we're flattening the curve, and I really hope that's the case, and I hope things get back to normal. I know a lot of people are suffering from it. Very tough economy to get through right now. I'm having to do several things to keep business going, and fortunately we have been able to. We've had to change around our whole business concept to make it through. But guys, if you fight and push and really believe in yourself, you can do it, and we can do it. We're a community here. So make sure you subscribe to the channel, the notification bell on, and please give this video a thumbs up. It really helps the video reach a broader audience, and I really appreciate that. So guys, thank you so much for watching, and I'll see you in the next one.